Hey guys, today we're going to talk about everyone's favorite subject of private mortgage insurance, otherwise known as PMI for short. Kidding when I say it's your favorite. Most people really don't know exactly what private mortgage insurance is, but they know enough to realize they really don't want it or they want to avoid it. That's very true. So, private mortgage insurance is typically looked at as a monthly premium that is paid by you, the client. And that premium is paid by you, but it benefits the mortgage company. So if you decide to stop making your mortgage payments and you default on your mortgage, that monthly PMI premium that you've paid for however long is going to go towards an insurance policy that will benefit the mortgage company. And the benefit that they're going to receive or realize is the difference between the amount you put down and 20% equity in the home based upon your purchase price. So let's say you put 10% down on a $100,000 home, and 3 years from now, God forbid something happens and you lose the house. The mortgage company is going to realize 10% of the purchase price, or $10,000 in this example, as a cost of doing business, so to speak, and a little bit of wellness for them to kind of lighten the load of them having to take the property over. So that said, if it's a life insurance policy for me, you're going to pay my life insurance policy, but you're not a beneficiary if something happens to me. That's not really a good thing. So most people know enough that they don't want to pay that. So on a conventional loan, which I previously outlined, that's the ultimate mortgage for you to take if you're able to. And there are lots of reasons why you can or can't potentially take a conventional mortgage. That's really where you want to get to at the end of the game, if at all possible. That's what we really kind of help to show you. On a conventional loan, if you put less than 20% down, you can pay your PMI monthly as part of your payment, and it will automatically go away when you have 22% equity in the home. When you're buying your home, you need to put 20% down to not have it or not address PMI. But when it's automatically going away, an automatic termination, they call it, based on 22% equity. There's other options though, whereas you can take what we call lender paid mortgage insurance. So let's pretend your interest rate would be 4.5%. You're putting 10% down. Instead of it being 4.5%, maybe we make it 4.875, but there's no monthly PMI. So then we show you the monthly payment comparison between 4.5% with monthly PMI, and then 4.875 with no PMI. A lot of times you'll see that 4.875, albeit at a higher interest rate, and that rate for 30 years, will be a lower monthly payment than the PMI with principal and interest as well. The math will always set you free and will give you the clarity. There are times where it might make sense, though, for you to take the lower interest rate with maybe a slightly higher payment, knowing that the PMI is going to go away, or knowing that your neighbor's home is going to go get listed for sale in a short period of time. It's going to dramatically raise the value of your home. And then at that point, you can lobby, typically through an appraisal being done, but you can lobby for that PMI to be taken off your home if you have 20% equity. So there are certainly options to consider on that. As I mentioned previously, on an FHA loan, and this is the most important thing for you to understand, on an FHA loan, unlike a conventional loan, there is monthly PMI. It is the only way to take the PMI. You cannot build it into the interest rate on an FHA loan. And that monthly PMI on an FHA loan is there for the life of the loan, regardless of your equity, regardless of what your neighbor's home sells for, regardless if you pay your balance down by 50%, does not matter. It is part of the law. Thank our friends in Washington. But that is the way it's been for the last several years now. So that's kind of the long and short with PMI. I always welcome and can't stress enough to ask questions. You might see this video, you might read some stuff online. It's confusing stuff. We eat, sleep, and drink it, and we're certainly glad to walk you through it however we can. Thanks, guys. Talk soon.